something. I set the pace when I'm running. I always take what I want and I always give it 100. Don't need a bank, no I'm funded. Play the game like it's nothing. I'm always thankful for something. Don't take for granted, stay humble. Now wake up! It's time to look at the enemy. Look in the mirror if he is no friend to me. It's not working out, maybe it's the chemistry. It's time to break up so I can make a better me. Better believe in your mind, cause it's everything. You can mold, shape, find almost anything. All it takes is some time and some clarity to find your identity. It's mind over everything. And when I feel like this, I'm immortal. 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 Don't stare, just looking up, don't stare. Turning back, I won't stop, I'ma fight until there's nothing left. It's so what? You're gonna be hurting bad, cause I've been to hell and back. You don't wanna make me mad, I stay strong, you will never see me crack. And if you get in my way, you gonna feel the wrath. Gotta say it to my face while he's looking back. Mirror breaks after math, when I hate, I attack. And when I feel like this, I'm immortal. 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 Don't be scared, just looking up, don't stare.
Howdy. Hi, Casey. How you doing, Gene? Hi, everybody. Today's gonna be quite loaded with a lot of announcements. Today's gonna be very different. First of all, hi there. You can actually see me this time around. And very much to some pleasure or, I don't know, sadness to each their own how they perceive this, we're not gonna be having lives on the daily basis as we were having them so far. Things are going to change in the channel. We instead are gonna be, don't ever think I'm saying that I'm going to be leaving the channel or closing down or anything of this, or just the opposite. In fact, it's the whole idea is to grow and make the channel expand, but it's a bit unsustainable to have the lives. So instead, the lives will be done roughly about once a week with it's hard to determine the schedule yet, I don't know, but instead I'll be making a video at least once a day. At least I will be trying to. Another very important announcement, I will be going on vacation to Bulgaria in about 12, 13-ish days for about several weeks there, 3 weeks. And so I will still be doing and having the videos and the lives and the members meetings and all that great stuff we now have in the community, which, by the way, those who don't know, we now have 2 meetings every week. One meeting is for absolutely everyone, all tiers participating. The second meeting is more of an advanced meeting. It's for the academy tier and for the advanced tier for people who understand the market a little bit better and kind of the technical tools we use and what it is that we're forecasting and why. Mostly the why. The why question is very important, which, by the way, brings me just for half a second right there. I now have only 2 spots available for the one-on-one tutoring academy, in which I teach you exactly how to use these tools, what are the patterns, and basically teach you a whole skill set that allows you to be independent and chart your own charts and understand how things work out and why things work out the way they do, and be able to even predict some things somewhat in advance before they actually take place. So currently there are only 2 spots. Another very important announcement before I forget, these 2 tiers, the Patreon, definitely do join us on the Patreon. The Patreon then allows you to join us on Discord and participate in all these meetings and all that beautiful stuff. Those are the 2 tiers that we have, but very important to note that this tier, the $40 tier, is now 60% discounted. In about 5 days, this tier will be hiked to $100. Okay, so definitely take the opportunity, join in, because otherwise you'll be missing out. And then you can, I mean, for right now, at least get an idea of that. What is that advanced skill set, and what it is, that advanced conversation that is happening behind the scenes between analysts and their students, for example, in this instance, or in communities like in this situation. Okay, so you'll actually be able to participate, learn that skill set, and become independent by slowly adjusting into it. Of course, instead of taking the academy sort of in a quick succession strike, you can then join slowly and sort of dip your toe into it, get an idea of the environment, the tools, the conversation, and then of course advance forward if you feel like that's something that is for you. Don't forget, right now that is 60% discounted. That's why it's $40. No promo code needed, no nothing, no headache. You simply sign up, and in retroactively, by the way, once the price is hiked, you will retain your old price. That $40 price will be retained as long as you retain that tier and remain a subscriber. So pretty simple. Hey Alex, hello Aqua, good to see you. Gene is there, yeah, cool beans, hello, hi everyone. So let's get into this. Those are, I think, most of the announcements that I had, and I thought that were very important for everyone to be sort of up to speed with the changes that are coming in the community. And again, if anyone thought here that I know I'm going to be minimizing the activity, in fact, just the opposite. We're going to be expanding and doing a lot more stuff now. It's just that most of it will be oriented towards the members, and kind of on that weekly basis we'll still have a live. Again, maybe the structure of the live will be slightly different, but the idea will still remain the same. Okay, let's go over the S&P. I think some interesting stuff happened today, and people are wondering whether I think that is it, and from here on out the market is ready for a rally. I will remind you that literally about 2 months ago, month and a half, 2 months ago, I was making a whole series of videos actually telling you how the market will have that movement potentially. Of course, my analysis brought me to think that we will not actually break above the 5,500. We will not have this entire segment within which we're currently located. But, well, I did warn how the market may end up breaking into this very area. But if you're attentive to what's really going on, we've been basically curving underneath that very same resistance that I was warning about, that is not that visible necessarily on this time frame, but will be a little bit more visible when we expand to the larger time frames. Why am I not seeing my own drawings? What's going on here? No, what's going on? What's the deal? What is the deal? What is the deal? Why am I not seeing? What? Okay. Now that was very interesting. I'm not sure what's going on or why I didn't do that, but that was a bit crazy. But you get the idea. That curvature that we're actually seeing on this scale of things will become a lot more apparent when we're going to look and identify the edge of the channel that I warned about in the first place, kind of running through this area. Actually, this is the ceiling, or maybe more so, I think it will be somewhere around here. But roughly, we'll have various sort of channels that are diagonally running through, and we're going to see the more internal one. Those who remember, we have the moving average of the linear regression, rather, which is a moving average of sorts, not just linear, over 400, a period of 400, 500, and they then give us a combination of sort of two channels that they are basically adjacent, they are parallel and moving downwards. On larger time frames, we'll see that in a bit. For now, let's go over the smaller time frames as we usually do, just kind of see what really happened today. Well, pretty obviously, we opened up with the gap, which over the longer weekend, some of my members were discussing on Discord and asking in our community, what do I think about these things? And some of whom were very, very bright to say, guys, boys, girls, ladies and gentlemen, don't forget we have a bunch of gaps right there, right above us. If we want to see some of them, let me try and point them out using maybe a different chart that has the tool on. I hope this has the tool. No, it does not have the tool that I want on. But the bottom line is, if I would then want to point them out manually, we're gonna have a gap right here, a tiny remnants of a gap right between this area and where we kind of were able, I'm gonna in fact highlight them. The gap is between this range and that range. So we still have the leftover. As you can see, the market gapped down. Just to be clear, those who don't understand what happened here, why is this a gap? This is basically a gap, is a hole that you can see right here. What has happened, the market has closed around this area and then opened up overnight. Basically some price action took place and we ended up breaking down all the way to this median, give or take. And well, as you can see, we then developed a hole that was partially filled, but then there's a little partition of it left over, roughly around 59.38 and 59.40. And the secondary gap that we have still left over, which was highlighted just earlier in a call, one of my members by the name of Leo. Hi Leo, shout out to you, you goddamn legend. Now we still have a leftover of this gap, the 5953, 5962, kind of this area, right? We still have a little bit of a partition within this area that was not closed. 59.62 all the way to 59.53 right there. And so the question is whether these gaps will be filled. The real deal here is with the momentum and the structure of the channel. The problem with the structure of the channel, as you realize, yes, we still do have a little bit of that bullish momentum that may allow us to move all the way to the range we see right here on the 5 minutes, the nearby resistance area that resides roughly around 59.95. Not all that significant given the momentum and how it's structured. We can easily move all the way up here and finalize this. Is not a big deal. Around 80, pretty simple. The real question is what we will then proceed doing afterwards. As you can already identify, on the 30 minutes, on the other hand, we are roughly at the edge of that channel. And the gaps we're talking about residing significantly above us. I mean, one of them, at least the nearby one, the 59.31 range, is near enough, potentially, arguably, on a very good bullish day. Let's say Nvidia, through some miraculous miracle, still, does not end up bringing the market down, right? And it'll be a whole different event that might do that. We might end up seeing that level, potentially a little bit of a retest, but you need to understand that is within the sort of confines and the idea of us actually having some remnants of bullish force right here on the 30 minutes. I mean, we are already at today. Today is 28th, so we're basically right now arriving just a step from the earnings, from the Fed minutes. So there are a couple of events that may drive the market to start moving downwards, at least breaking down. Why we're still forecasting that, as you can see, for example, in the 30 minutes, we're already starting to break down. So on the 45 minutes, if we look at the 1 hour, we're going to realize we're kind of there and more than prepped to break. And in fact, we're already having that convergence divergence moment, which we were predicting just earlier last week, right? On our 4 hour, for example, we are still in what would be defined as oversold conditions, although we are moving above the 20 range. But I would highlight and remind you all that anything and everything that happens below 50 still remains to be bearish. So this movement is just a normal procedure that sort of happens on the internal size, if you will, right, of the larger structure. So the larger cycle or structure is still, of course, is more than relevant. Now, if we're looking at this, we're having convergence divergence, not that abnormal, something that we would normally see at least alongside of the bottom. Once we do penetrate, this is a little bit early given that it is above the 20, so far more similar to this sort of impulse rather than to the other ones. Is that going to behave necessarily like this way? Well, there's a bit of a difference. That on this partition, we're still on our wave upwards, right? As you can tell, we're still moving to the upside. And here things are a little bit different. Here we already overturned, as you can see, via the channels, and we're in fact actually moving downwards. That's sort of the actual direction and motive of our channel right now. As you can see very clearly right now with less noise on the screen, clearly you can see the current channel that is moving downwards very clearly on the daily chart. So as you can imagine, this is something more persistent. and will remain holding up. As you can see, we just penetrated in, so at least for the following arguably weeks and potentially even months. Now let's look into the weekly chart. The weekly chart is the only one that is kind of being a little bit iffy, but we'll get back to that in a second when we're saying iffy. In reality, we're seeing basically a movement towards, the expectation was, those who don't remember, is to see some sort of a confirmation-like movement into the breakdown of the overall cycle. There is a bit of a caveat with this. You do need to be familiar with the cycle and identify that these are just internal waves in a larger scheme of things, right? So if you don't know about the cycle, you don't understand that, that will not make full sense. But still, we are now hitting the 80 area. If without penetrating, we'll start seeing convergence and divergence here. That'll be a very clear hint that we cannot, and we're not able to then move into and close these gaps, which is very unfortunate because we would actually like to see them get closed. They are more so looked upon like chores, and if they're not closed, it's a little bit more problematic. If they're not closed, we will then end up spending potentially a lot of time just breaking down below them just to go back to close them, just to then break down again, which in essence no one gets what they want. The bulls don't get a rally, we don't get a breakdown. Everybody kind of gets stuck within the very same realm of that very same average price. So kind of a sideways movement with high volatility, meaning sideways to both sides and still retaining this main average price of roughly around 5,400, which is a very bad idea, moving back and forth just to then end up moving downwards later down the line. Again, something more conclusive would be more beneficial for both sides of the market, arguably. Now let's look at the larger time frames, because I mean, at the end of the day, the weekly is not necessarily the end all and be all of all things. In fact, it is kind of playing out still normally. What is more important here is the monthly, that is right now about to penetrate within about, well, 2 days in this following session that we're going to have throughout today, or well, for me today, because it's already today for me. For you guys, it's tomorrow, because as you guys can see, it's already 1 o'clock in the at night, okay, 1:30, in fact. And we are still very, very bearish, moving. Of course, you are seeing that sort of convergence of the forces moving, slipping into the oversold territory. In fact, as you can identify, that's more of a normal thing, irregardless of whether we are on an uptrend or a downtrend. It is a normal behavior simply because the stool is linear and has no other way to show you that very behavior other than in linear form. What is also very important to highlight, most people will be then comparing, or at least something that is actually happening quite a bit right now, people are comparing the breakdown that we had in the prime real estate bubble, the crash of 2008, 2009, if you will, and the reasoning and so the process are so different, and the location where we are in the overall cycle are so big. So I would say these two structures are incomparable, this to that, while in reality we do have a cycle that is far, far, far older, that is comparable quite well, in fact, and potentially is the only one that should be compared to the current cycle that we're having. But in reality, that's the fallacy that most people are doing, and this is a big fallacy because we're not in the same place in the cycle. In fact, the current structure is potentially going to be a lot deeper, and those who don't know, we're actually looking at 3,300 as a potential bottom. I know it's very difficult for you to imagine, but if you ask the students here who actually know the system, understand why there's this sort of very predefined structure far in advance, that all the market does is fills this space via the rhythm that is also in a way very meticulous and accurate and predefined. And so you can kind of identify the nature of the wave and the upcoming price action before it ever happens. So I mean, there is a reason or a way in which I've been able to predict a lot of these movements so far in advance. And that is it. It's very simple. That gives us exactly a play into the larger picture. So all I say is basically ignore the smaller noise that you see within the smaller time frames. This is noise. Imagine how much damage can we do within 4 candlesticks of 30 minutes, which is what, 2 hours? You know what? I'm going to be larger with that with you, so to speak. Let's say you get 8 candlesticks. So what? 8 hours? So what? 4 hours? Not 2 hours. 4 hours, right? 4 hours. 8 hours. In fact, the whole session, right? If you even spend the whole session doing damage on the 30 minutes, it can be then mitigated and just sort of erased by a movement that would be literally on the 1 hourly time frame and will be going exactly on the opposite direction. And so more so, I would say, if that applies to the smaller time frames, what matters is the larger, bigger picture of things, is how we're having convergence, divergence right here on the quarterly chart and getting prepared for a move that potentially is going to last for, well, a handful of years. Right, and we are seeing confirmation on that side on the convergence divergence behavior we're seeing around the 50 range on the half-year chart. And so these are far more persistent channels and trends, and as you can see, we already have exceeded completely out of bounds, and the corrective movement has just begun. And the first movement we've seen so far is just an attempt of the price action to test some of the lower areas that we're going to be moving into, so to speak. You were thinking about Volcker. The Volcker correction, potentially. Again, we've spoke about this before. Look, interest rates cannot be hiked. Borrowing is not at a healthy place. In fact, even when you go to the bank, you're not going to get borrowing at the rate you think you will, right? People who entered COVID period with savings, a lot of them are now in debt or living off of credit or in various forms of debt, right? The job numbers are not getting better. Employment in general, if you look at employment right now, and you don't just look at the numbers they try to present, but really look at the numbers, you're going to realize that things are just getting worse and not better. And people who are touting for AI, that actually makes things worse. Again, Gene here, I know he makes fun and he puts a, chomping on his nails emoji, but in reality, Gene knows. We spoke about this very issue that is going to become more of a reality the further on we go. And yes, Trump is wonderful for the U.S. economy, but what matters at the end of the day is inflation. And if inflation does not get better, and if still people pay, 4 times the amount they used to pay before to get potentially 70% of the product in the first place, so we're in a very bad place. No one really expects prices to go back to normal as they were pre-COVID, because that's not real. I mean, inflation, conditions, supply chain, just the cost of goods, the cost of services, salaries, everything plays a role. Oil plays a gigantic, tremendous central role in everything. But at the end of the day, current inflation, current interest rates are not sustainable for the long run. The supply chain is still broken. Geopolitical conditions are still crap. We are so far off of normality that even if we're going to try and put everything back to normal, we're going to have to sustain this for a handful of years to actually go back to normality. So everything we're having right now is just the precursor of the actual downwards trend that I'm expecting to see. And other analyst groups such as Goldman Sachs have been saying and warning about a lost decade potentially for quite a while. And the lost decade does not have to be an exact decade. As we know, with standard deviation of at least 2 years, that thing can last from anywhere between 8 to 12 years. So realistically speaking, what we're looking at right now is just the beginning. It's just that, as Tom likes to say and compare, is that moment where you start to smell the sea, right? We're not seeing it yet. We have no idea how things are going to look like, but we kind of start to identify certain signals that are letting us know in which direction the market is overall moving right now, or at least will be moving for a period. And what we've got right now was just a mere promo, a trailer, if you will. Okay? Danny, Alex, hi everyone, by the way. And yeah, you can ask Gene. Gene knows about these things. We warned about this and spoke about this in the community quite a bit. Another quick shout out for the community. Definitely do join us on the Discord. Discord is full of great, amazing people, like-minded people, great discussions, whether it's in the open forum when we have the hangouts, whether it's the student sessions I have in the one-on-one. By the way, you should definitely join in just to take a look at the testimonials and what it's worth. The academy is like for a person who does not know technical analysis, starts from scratch, and what sort of a skill set does that interpret to. And when I say independence, of the ability to analyze and not being dependent on these various talking heads in the media and their narrative and the sentiment and all that crap, I highly recommend you take a look. Here it is. Here he is. Here is the legend himself. Here is the review of the legend himself, by the way, boys and girls. This is how the legend himself, Gene, here, had his experience. You smashed the like, Gene? You beautiful legend. Thank you all, guys. You are the core of the heart and soul of this community. Without you, it's just me rambling into a mic, just some random dude on the internet. So there's that. Definitely do join the community. You'll get to learn a whole new skill set. Of course, hang out with like-minded people, join various meetings, discuss your individual stocks. Those who wonder what happened to the individual stock analysis that we used to do on the community, that actually now transitioned purely to the Discord members, and we have our hangouts. And this is where I answer their questions about various individual stocks and how that plays into the overall scheme of the overall market right now. Of course, we have the academic partition now kind of reorganizing and having a dedicated set of channels, an archive, if you will, right, for the exclusive for the members' exclusive content, the ad-free stuff, the meetings we have, all of that stuff will be combined into the archive, so it will be accessible no matter whether you joined in a month from now or not. You'll always be able to join and view these things, sort of what it was that was discussed in the past. What else? No, I mean, that's it. Of course, we do have a whole bunch of really cool stuff right here, from just random music I post and other members do, to other topics from casual posts, just various discussions, things that talk about philosophy, psychology, you just sort of name it, right? Various awesome topics besides just the technical analysis side of things. Definitely join us and you'll learn a whole new skill set. Now, with regards to the 1-on-1 Academy, like I said, don't forget there are only 2 spots left, and once they're filled, of course, the Academy will be locked for a little bit there until I'll have more available spots, because simply, again, I don't want to overwork myself to death. That is it, boys and girls. I think that is all. So that's all the announcement. That's all there is to sort of bring you up to speed. If you're not yet a member of the community, definitely join, because this tier right now, the $40 tier, is 60% discounted. On the other hand, if you really want to take this to a whole new level and really learn to be independent, similar to how my members are, I would highly recommend to consider the 1-on-1 Academy, because it's far more powerful than the $40 tier or the $100 tier, which what it's going to be in about 5 days from now. Alrighty, boys and girls, don't miss out. I'll see you in the next one. Hopefully, I'll see you in the community and we'll get to learn all sorts of manners of awesome things about how technical analysis truly works and what kind of an advantage it gives you, whether you're a trader, investor, whatever you call yourself, really. This is a necessary skill set for everyone. Remember that. Love you much, boys and girls. See you in the next one. Bye-bye.